position. He is a graduate of the University de Montréal, comme moi, and I wanted to mention that specifically. Thank you, Monsieur Giroux, for your time and for doing this with us. Again, apologies for starting late. We're very grateful. Over to you.
Merci beaucoup, Daniel, and it's a pleasure to be here with you. So first of all, my thanks to the CD Howe Institute for hosting this event, and thank you all for joining us. As our country continues to grapple with more unprecedented economic and geopolitical uncertainty and new financial pressures, today's webinar will present our latest assessment of the federal government's fiscal health and provide the backdrop for next week's speech from the throne, just from a fiscal perspective. Of course, I won't venture into the policies. I would never dare to do that. There are other people way above my pay grade who are well-versed into policies. So if you're here today, you probably have a pretty good sense of who the PBO is and what we do, but I thought I'd take a minute to just recap quickly. So we monitor economic trends and government spending, future spending mostly, to provide independent data points separate from those from the Government of Canada and the Department of Finance. We're not the government, and we do not work for the government. We work for parliamentarians, and that's an important distinction because it means that we work for all parliamentarians, irrespective of their political affiliations. It also means MPs as well as senators. And not being the government, you may wonder, what are we then? So we're an independent agent of Parliament, like the Auditor General, the Chief Electoral Officer, or the Commissioner of Official Languages. So the purpose for creating and having a PBO is to provide parliamentarians with an independent, nonpartisan perspective on public finances and the economy. So as part of our mandate, we regularly release updates on the economic and fiscal situation. We call these the economic and fiscal outlooks. And on March 5th, we released our latest EFO, as we call them, Economic and Fiscal Outlook. That's one of our regular reports, released semi-annually in normal circumstances. We did way more during the pandemic, but generally speaking, twice a year. It also provides baseline projection to help parliamentarians gauge potential economic and fiscal outcomes under different policy settings. As we were getting close to an election, we thought that was a good basis, a good time for that report. So our March outlook incorporates economic data up to February 14 and new measures announced by the former government in its 2024 fall economic update. Based on that data, we projected at the time that the Canadian economy would grow by 1.7% in 2025 as uncertainty and slowing population growth both weighed on business investment and consumer spending. I say slower population growth as some of you may remember that in the fall of 2024, the government announced a significant decrease in the number of temporary and permanent immigrants intake into Canada. And again, pre-election, the financial position of the federal government was as follows. For the fiscal year that was then ending, 2024-25, we projected the budgetary deficit to go to $50.1 billion, or 1.6% of GDP, and that was a decrease compared to the almost $62 billion of the previous years, 2023-24. Under status quo policy, so that was before the election and before any promises were made, electoral promises, we projected that the federal debt to GDP ratio was projected to fall over the projection horizon, dropping to 39.2% in 2029-30, but to remain well above its pre-pandemic level of 31.2% reached in 2019-2020. So moving on to slide 4, the next slide. given the evolving uncertainty around trade actions, and that's euphemism for what's happening south of the border, our outlook projection does account for heightened economic uncertainty. So the uncertainty and the um, trying to anticipate the actions of our major trading partner, but it does not directly include the threatened US tariffs because when we did the projections in March, there was still a high level of uncertainty as to the extent, the level of these tariffs and how long they would be in place. And I don't think the uncertainty has lifted. It's still a highly uncertain environment. So given that it was uncertain, but a highly risky proposition, we did include an illustrative trade conflict scenario, which presents the economic implications of potential US tariffs and Canadian retaliation. So to illustrate the impact, we simulated a downside scenario based on a couple of policy assumptions. And again, keep in mind that that was done in March. So in that simulated downside scenario, we tried to estimate the impact of the US imposing a permanent 25% tariff on non-energy goods from Canada, and Canadian energy exports to the US would face a 10% tariff, which I understand is still the case. The US also imposes, in that scenario, a permanent 25% tariffs on imports from Mexico, 10% on imports from China, and an additional 25% tariff on steel and aluminum imports from other trading partners. And in our scenario, Canada, Mexico, and China retaliate by imposing permanent reciprocal tariffs on goods imports from the US. Tariff revenue also were to be recycled back into the economy via transfers to households and government spending, which is what the government has indicated prior to the election and since. So our modeling suggests that these policies would permanently reduce Canada's real GDP by about 2% over the medium term relative to a situation without tariffs. So this could represent like 2% on the economy, but also a net hit of approximately $9 billion to federal revenues, in addition to the impact on provincial revenues. So that was before the election. On March 15th, the current prime minister, was sworn in as prime minister at the time, and his first act was to remove the consumer carbon tax. However, the April 2025 rebate was maintained, and because the rebate is supposed to rebate in advance what will be paid by households, if I understand it correctly, and if I remember correctly, it was a pure gift because there was nothing to rebate, strictly speaking. So it was rebating something that no longer existed or was no longer to exist. So right there, our March 2025 or early March outlook was not accurate anymore because of that single decision. In addition, on March 23rd, the Governor General dissolved the 44th Parliament for the general election. And on March 24th, the day after, we issued our election costing baseline, which presented the economic and fiscal baseline projections that we were going to use, and we did use for the 2025 election proposal costing period. So the election baseline was not significantly different than our economic and fiscal outlook, but it included all measures announced between the fall statement in December up to March 14th, and including the carbon price repeal. So we'll have, over the next couple of minutes, we'll have a chance to look at the impact this all had on the fiscal projections and the fiscal situation. But before the election, so that meant that before at the beginning of the campaign, we had a slightly different fiscal picture, slightly higher deficits, but still declining over time, but a slowly declining debt to GDP ratio still. And that was not unlike the early March outlook. That was before the electoral campaign, though, and there were several commitments made during the campaign. Some expensive, some less so, and so we'll get into that in a minute. So, looking at the 45th general election, as part of our mandate, we have the capacity to cost electoral proposals made by parties during a campaign, but we only do that at the request of political parties. So if a party does not ask us to cost something, we don't, because we're prevented in legislation from doing any other work. Like, we don't do our regular work during an electoral campaign, and we are not supposed to proactively cost proposals. So the 45th general election was the third time that this service was provided to parties. And it was a short period of short campaign, 36 days in total, unlike the fixed election period, where under legislation, we start 120 days before voting day. So when it's a snap election, like in 2025 and 2021, we only start the day the parliament is dissolved. So we don't publish any reports during that campaign. We only publish financial cost estimates of proposed campaign measures that political parties requested and authorized us to release. So you can see on that slide that 2019, we were asked to prepare some 200 estimates. We ended up publishing 115. In the latest electoral campaign, we were asked to prepare about 120, and we ended up publishing about 60. So the gap in between could be a number of factors. Parties decided that they no longer wanted us to proceed with costings. For example, they saw that other parties were making similar promises, or they changed their mind. It could also be that we completed the estimate, but the party, when they saw the numbers, were not satisfied that it was fulfilling the intended policy purpose, and they never gave us the authorization to release them. So that's explaining the gap between what we costed and what we published. So we did that service during the election, but we also provided support in various formats for parties. We, for example, published our economic and fiscal baseline. We also provided them with a sensitivity of fiscal projections to economic shocks. We updated our public debt charges calculator, and we updated our ready reckoner, where parties or anybody, in fact, can look at the fiscal impact of changing some tax parameters. So moving on to the next slide, let's have a look at some of the major revenue and saving items included in the Liberal Party's platform. Because they're the one who won the electorate, that's why I'm turning to this aspect. But we could have done the same for other parties, because in fact, the 5 parties that were represented at the time of dissolution asked us to cost several of their measures. So we chose a Liberal for this presentation because they're forming government, but had somebody else form government, we would be presenting their main elements. So looking at the Liberal Party's platform, you may find it hard to see on this slide, but the ones with the little asterisks are the one that we costed. Those without asterisks, we didn't cost them. I can't say whether because they didn't ask us or because they asked us but didn't authorize us to release the costings. I'll let the Liberal Party disclose that. So tariff revenue, the government estimated, or the Liberal Party estimated that at $20 billion. It's highly uncertain given that relief has already been provided to several sectors, but at the time of the election, that's what the Liberal Party estimated the tariff revenue to be. The other elements like increasing penalties and fines, again, we didn't cost that. Savings from increased government productivity, based on my experience, having worked on several expenditure reviews in the government, um, in, increasing government productivity and booking money. Maybe there's structure behind that, and there's a level of certainty that the government has. But based on my experience, it's uncertain to be able to count on increasing productivity to save money. It's been tried before. For example, that was the whole idea behind the centralization of pay services and the introduction of Phoenix. We all saw how it went. So there is some risk in booking that. The other measures, I'm fairly confident in their cost because we costed them. So, but this slide is mostly to mention that there's quite a bit of billions of dollars included in the Liberal Party platform when it comes to savings and revenue measures or revenue foregone measures. Let's take a look at some of the major new measures that hit the expenditure side. One of the most expensive promises is the increase in defense spending. So the Liberal Party asked us to cost a certain way of increasing liberal defense spending. Last time we looked at that outside of an election campaign, we estimated the fiscal impact of reaching the NATO target of spending 2% of GDP, of a country's GDP. In Canada's case, Canada, obviously, spending 2% of our GDP on defense as defined by NATO. And that would mean an increase from $41 billion under the NATO definition to $82 billion by 2032 if Canada was to meet its NATO target by that time. So big spending implications and a significant hit to the fisc. Of course, there's already some ramping up of defense expenditures that's expected and built in the fiscal framework. But these items, defense first and foremost, are quite expensive. The other commitments are mostly envelopes or funds, so it's fairly easy to estimate the cost, and it's a matter of determining the speed at which these spending targets will be hit. So, but still, a lot of money, obviously, which with the government's decision not to table a budget or a fiscal update this spring, we won't know the government's fiscal plan until the fall, unfortunately. But based on the Liberal platform, you can see that we are expected to go from deficits of about $42 billion in the current fiscal year to 62. And instead of hitting to $40 billion, no, that's the wrong line, sorry. Instead of hitting some $28 billion in 28, 29, the government is on track to having $48 billion deficit. So additional revenues and savings to reduce the overall deficit, but more than offset by significant new expenditures. So we're very likely to have higher deficits and spending, but we won't know for sure the impact on the fiscal framework until the fall, which, in my humble opinion, is a missed opportunity and is not a good practice in terms of transparency and accountability. It is understandable not to have a budget, a full-fledged budget this spring, given that the government has a lot on its plate, has just been sworn in, has to prepare a speech from the throne, face the US and the geopolitical environment that is highly uncertain. But in my humble opinion, at the very least, an economic and certainly fiscal update would have been warranted. The platform also had a commitment to distinguish operating from capital spending for the purpose of determining the deficit. And that's a commitment that had been made up by the Prime Minister before the election. And I'll probably conclude with that. This distinction already exists under accrual accounting principles, under which the Government of Canada publishes its financial statements, which are reviewed by the Auditor General. So a different definition to include more items under investments as opposed to current spending or operating spending would presumably include spending that has the potential to increase the productive capacity of the economy. But the big question this raises is, what do you include in that category of investments as opposed to operating spending? So that will probably lead to significant trade-offs that will be potentially difficult to draw the line on. So in my view, in our view at the PBO, it's not clear yet how this would work, as it would likely be contrary to some, at least some, accounting principles and standards. And I'll be very interested to see the Auditor General's view when we get more details and when the first public accounts and statements get released. More details to come, as they say. So that's why a budget would have been convenient and useful for us to see these types of details. So in summary, we have a new government that has promised lower taxes, higher spending, which will lead to higher deficit. There's no budget for this spring and no fiscal update, so we'll have to wait until the fall. But the office here will continue to work at will continue to look at operating expenditures and government finances. We'll have a short session, probably a 3 or 4 week session that will start next week. We will look at government expenditures, notably what will be tabled in the main estimates, which will be the piece of legislation that will finance government operations for the rest of the year. And whenever there's a fiscal update, we will be ready to scrutinize that and continue to support parliamentarians as to the impacts for the deficit and the debt and the Canadian economy going forward. So I know I've spoken slightly more than I was expected to, which is unusual for me. So I'll stop here and I'll turn the floor back to Mr. Schwanen.
Thank you very much. Merci beaucoup, Monsieur Giroux. So the instructions, if you want to ask questions, I do have some myself. But the instructions are simply to please type your question or comment in the chat. We have one we have one already about the PBO's annual budget. So what is your own budget, Mr. Giroux?
Our own budget is about $7.5 million. It's been relatively stable for the last several years with increases to cover inflation. So 2% for the last 2 or 3 years, and a freeze for a few years when I arrived in the role. So it remained flat at about 7.3 for a number of years, and then small increases in the last 2 or 3 years. The CFO from the office is online, so she can correct me if I'm wrong, but that gives you an idea of the order of magnitude, at least. So $7.5 million per year.
Thank you very much. I have a question about the interest rate assumption. Is that a kind of questions that I imagine that you're asked? We've seen a lot of gyrations and increase in long-term interest rates just in the past few weeks. Is that something that would impact your projections? And to what extent?
Absolutely. Yeah, absolutely. So at the time of our fiscal outlook, we estimated that the Bank of Canada policy rate would be at 2.75% at the end of this year and remain fairly stable after that throughout 2029. We'll see with the impact of the tariffs and how that situation has evolved, the price of oil and potential increases to oil production, as well as the real impact of what ends up happening with tariffs, as well as government policies. might change that. For example, 2 years ago, we were estimating that the neutral policy rate at the Bank of Canada was about 2.25%, but we've progressively revised that upwards as we see that the economy is responding slightly differently than what most people expected to interest rate decreases. So as a result, we've increased our estimate, as has the bank, as for what the neutral policy rate means or is for Canada. But of course, if interest rates were to be higher than expected, for example, if the US fiscal situation deteriorates and they have further downgrades for their debt, pushing their interest rates higher, that could have significant impacts on Canada, notably by slowing economic growth, and for the federal government by increasing its costs of borrowing. But it may not necessarily be the case that if the US debt goes up or their interest rates go up, that ours will go up in the same or by the same order of magnitude. It depends on the perception of the relative strength and creditworthiness of both countries. So it's something that we have rarely seen, to say the least, having that kind of leadership in the US and that kind of decision making, uh, statements, and then backtracking. So that's what I meant earlier in the presentation when I said the uncertainty is already included in our baseline, in our economic and fiscal outlook, because we have lived with that uncertainty for a couple of months now.
Thank you. You mentioned the increased emphasis on the distinction between operating and capital expenditures. Um, I I have a couple of questions about that, but the main one from one of our participants online is, you know, do you consider the economic benefits that can derive from government spendings or policies in your projections? Uh, and then, is there a difference then between operating and capital? Like, how do you view the impact of those policies, or maybe that distinction between operating and capital expenditures?
So, so generally speaking, when we estimate the cost of a policy measure, we don't include its benefits. So we don't do cost benefit analysis. Uh, there's a couple of reasons for that. Cost benefit analysis, sometimes the benefits are easily quantifiable, but very often they're not. So that would open up a very different line of business for us,
Mm.
and it would require much more resources. Another reason is that the government is usually very good, very adept at promoting the benefits of its measures. And we find there's often an asymmetry of information when it comes to properly estimating the cost. So that's why we focus on the cost rather than the cost and the benefits. And generally speaking, most similar institutions in the world focus on the costs or the fiscal impacts as opposed to the benefits. Um, so these are the main reasons why we don't include the benefits as well. But for example, if the government increases its spending, generally speaking, that has a spin-off effect on the economy. And in that case, yes, our general equilibrium models have that factor that impact on economic growth. But for individual measures, generally, we don't do that.
Thank you. Um, you commented, I think it's fair to say, skeptically about the potential for, finding efficiencies and productivity improvements in government. But let me challenge you here a little bit on my behalf and one of the person online about the potential role, which I think was emphasized by now the new government, of AI in generating such
Mhm.
efficiencies and productivity improvement. Do you have a view on that? Is that something that you might, your office might even be interested in or able to estimate?
Yeah, I'm sure there's an immense potential for AI to increase the efficiency of government operations. I'm not disputing that it's not possible to do it. When I express skepticism, it's with the government booking that
Mm.
saving before having done the legwork. Maybe they have, but we haven't seen that. So there's been many exercises over the last decades where the government said, we will be more effective, we'll be more efficient, we'll do things differently, and that will lead to savings. They book it, and then they look at what could be done and they implement it, only to find out that they either were very optimistic in their ambition, or they did realize savings, but they realized with all these resources that were freed up, they could do more. They could launch new programs or they could spend it. So that's why I'm expressing skepticism, because these savings measures, they either tend not to materialize to the extent that the government hopes they will, or if they do materialize, they get recycled and they get spent in other areas. So these are the two main reasons why I express skepticism with booking these savings before having done the work. But I'm totally convinced that there are many ways that the government could benefit from these new technologies. And even in the absence of these new technologies, governments could be more efficient. And anybody who works in any big organization, you can find efficiencies. It's a perpetual work to find efficiencies and ways to do things better, including in my own organization.
Well said. We can all learn from that perspective. Thank you. But yes, so one attendee here emphasized that municipalities that have adopted AI agents are reporting significant productivity gains. So just wanted to tease out your thinking on that. A more technical question: Are the fall economic statement commitments, quote unquote, on the books? And will they show up or be visible in the upcoming main estimates? Uh, Over to you.
By on the books, by on the books, I assume that it's meant, are they included in the government's fiscal framework, or are they already factored in the deficit figures? The answer is yes. The government, previous and I assume current, have been very good at including provisions and money they've set it aside for decisions they've made, or decisions they have not yet announced but are quite sure will be announced, or have not yet made but have been able to quantify. So generally speaking, for the last several years, at least since I've been in this role, and probably before, way before, governments have been good at incorporating the fiscal impact of their decisions, or even not yet decisions, but commitments in the fiscal framework. Does that mean that they have to do it? No, they can always change their mind and undo some of them. Like we saw the capital gains inclusion rate, the new government has decided, well, that they would not proceed with the increase in the inclusion rate of capital gains, which costs a few $1 billion to the federal treasury. So yes, these previous decisions have been included in the fiscal framework, and yes, they can undo some of them with either savings or costs, depending on the nature of the measures.
Thank you very much. I'm going back to an earlier question in the chat about the special warrants that were issued, and regarding this is my own ignorance here, but I assume it's regarding payments when Parliament is not in session or during elections. So the issuance of these two special warrants, does it affect our ability to, quote unquote, your ability to follow the money?
That's a good question, and that's a question that takes place only during elections, obviously, and sometimes not even during elections, because, for example, if election had been triggered after main estimates had been approved, then there probably would be little to no need to use the Governor General warrants. So the warrants are a special provision that allows government departments and the government to continue to operate in the absence of money that has been approved by Parliament, because all the money that the government spends has to be approved by Parliament, either by for statutory programs such as old age security. They've been voted on once, and they provide authority to the government to spend and send checks to seniors on an ongoing basis, or on an annual basis. They have to be renewed every year, like operating funding for my office or government departments. So it has to be renewed annually. Because Parliament was dissolved before it had the chance to vote on these for the year that started April 1st, there's a special provision whereby the Governor in Council, so Cabinet, asks the Governor General to provide funding for a specific period of time, usually 60 days at a time, can be 45 days at a time, but the period where this can be done is limited to when Parliament is not sitting, is dissolved, in fact. So that was done, but there's relatively good accountability with respect to how it's spent and why it's been sought. And by convention, there are limits as to what you can seek, what type of money you can seek under warrants. It's to continue government operations. It's not to launch new initiatives or to increase spending. It's literally to keep the lights on unless there's an emergency that requires the spending of public money. So it does not really affect our capacity to follow the money because there's good accountability with that and good transparency. It's delayed transparency and it makes sense. But we also have good relationships with the Treasury Board Secretariat, which is the keeper of the total amounts of money sought under the warrants.
Well, thank you. That's very enlightening and reassuring. Um, you mentioned the impact of changes in immigration policy to your the change in outlook. But we have a question wondering whether you could elaborate a little bit on that scenario and the impact, how you see it, and the impact of that scenario.
So that's a good question because we were faced with that dilemma last year, in fact, when we started the year with immigration levels that were ambitious and consistent with what we had seen for several months, few years, in fact. And then the government started to make announcements, first to reduce the number of temporary immigrants, and then progressive declines in the number of permanent immigrants. And that had an impact, well, is expected, obviously, to have an impact on many fronts: housing, the demand for housing, and more broadly, economic growth. So we included in our fall economic and fiscal outlook and the March economic and fiscal outlook the lower demographic growth, mostly driven by lower immigration. So that has an impact on economic growth, and it's reflected in our update, in our fiscal outlooks for October. I think it was in October, but then we didn't include everything because not everything, not the most recent at that time were not included in our October, but the March outlook included everything that had been announced up to mid-February. And by then, I think the vast majority of policy changes related to permanent and temporary immigration were announced. So it's included, but as the question alludes to, there is an economic impact on reducing the number of immigrants, a significant impact, a measurable impact.
Thank you. Speaking of measurable impacts. Uh, the You mentioned the October, you revised your outlook in October and then in March. Uh, is there such a thing as revising the outlook if all hell breaks loose? Pardon for the expression in the in the U.S. economy and it affects us. Are you able to pivot, so to speak, and quickly issue some revised numbers to inform the public and parliamentarians?
Yeah, we are, and we did a few months in October in 2020. I think we started in April. We did one in May or June, one in July, and one in the fall. At a time where very few institutions, let alone the government, were willing to publish economic and fiscal outlooks. So let's say there's a debt crisis in the US, which I don't wish for, or major economic events that affects us. We have the capacity to turn things around pretty quickly and release an economic and fiscal outlook within a few, I'd say, weeks, because we still have to do the number crunching and we have to have our report drafted and translated. So in a matter of a few weeks, we can turn around and issue an updated economic and fiscal outlook. So there's enough agility in the office and certainly enough brain power to do that. And I'm not talking about me, I'm talking about smarter people than me who can do the numbers. I'm just a pretty face, as I often say. So it's not a good, I know it's not a good analogy.
Okay, no, thank you very much. And So we have a question about. So you answer to parliamentarians, um, and presumably just they can ask you to do this work, or but you can also do it of your own
Yep.
volition, so that you're prepared. How about members of the public? Can they write to the parliamentary budget officer and say, you know, can we look at this or at that? Can they ask you to provide independent analyses of policies?
Uh, Unfortunately, my legislation says that I respond to requests from parliamentarians and House and Senate committees. So if members of the public write to me and say, please look at that, they can write, but they're not my clients in at least as expressed in the Parliament of Canada Act. So if they write to me, these are suggestions. Because I have the capacity to self-initiate, that could feed into our reflection here among the office and at the management table. And if there's something that, wow, that's a great idea, I wish we had thought about that, then that could happen. But based on my experience over the last almost 7 years, it's rarely happened that we get an idea from the public that we have not thought about. What we tend to get from the public are mostly requests to look at that specific nasty public servant who's doing bad things with their own budget. So we rarely get ideas that are within our mandate, first and foremost.
Okay, so as one intervener here mentioned, maybe the best thing is to write to their MP and ask ask
Yeah, well,
on
they
their
can they can write to us, of course. And if there's
yeah.
a good suggestion, of course we'll consider that. Like, because it comes from the public doesn't mean that, oh no,
Mhm.
I will refuse to look at it. I look at it. But we got a call earlier this week, just an anecdote. Somebody told us to look at the purchase of the spa. Which spa and where? And so
Okay, wow, that's that's interesting. Um, I'm sure there are a lot of stories like that, but
some.
are you yeah are you able to reflect, um, maybe bring you on the terrain of the pushback that you obviously get sometimes for
Mhm.
your analysis. Um, um, there was like the carbon tax little while ago, for example. Um, so can you reflect a little bit on that dynamic that you must be facing from time to time, how you respond, etc.?
So when I accepted the job, I anticipated and expected to get some pushback. Because if you never get any pushback, it means that either your reports and analysis are not very relevant and not touching on issues of significance for parliamentarians, or that you're taking too long, and by the time you publish your reports, the issue has come and gone. So it's part of the job, I think, to face some pushback and some criticism. And when you get that, you have to reflect on why is that? Is it disagreement on the conclusions? Is it disagreement on the methodology? Or is it because you're pushing against vested interests, which often happens? One can think, for example, at reports on military expenditures. If we say that buying certain types of military equipment is much more expensive than initially thought, of course, the suppliers may find it slightly annoying that somebody points that out. So, in that case, getting pushback is understandable. However, when you get pushback because you made a mistake or your analysis is flawed, I think you have to reflect, and that's why, and correct, obviously. So I think that's why getting pushback is to be expected, but getting pushback should not be ignored or dismissed just because it comes from the other side. For example, it comes from stakeholders or from the government, and you're saying their numbers should be higher than they are or lower than they are. So I think to be expected to get pushback, but every single time you get pushback, you have to look at why and what's the source and the reason behind the disagreement. So it's, in my opinion, never to be taken lightly, always to be taken seriously, but also always to be um, considered for what it is. Most of the time, it's a disagreement, but sometimes there's a very valid point with the disagreement and the pushback. And that's why it's very easy to constantly dismiss the pushback, and it requires constant vigilance to be alert to the cases where you might have missed something.
Well, really appreciate that comment. You mentioned the carbon tax, of course, with that gap, I suppose,
Mm.
between there was still a payment coming, but really the tax had been uh, for the rebate, and the tax had been abolished. But longer term, how do you or midterm, how do you evaluate the impact of that reduction in the carbon tax?
So we've already done the assessment of the retail carbon tax, to call it that way, because there's an industrial mechanism to reduce emissions. And that, my understanding is that the current government wants to keep that in place. So it's the retail carbon tax that's been eliminated. We already assessed the economic and fiscal impact of the retail carbon tax. So its elimination, we've already estimated by default by estimating the impact of its introduction and gradual increases. In the absence of a carbon tax, we could refine or continue the analysis, but in that case, it would be strictly updating the numbers that we have already published. And our latest assessment of the retail carbon tax, or the fuel charge as it's properly called, was the methodology was reviewed by the Dutch equivalent, so the CPB, as well as the US Congressional Budget Office. So my view on that is that the methodology was solid, and we did that because there was an inadvertent mistake in our earlier work. So when we last looked at that, we wanted to be like on very solid ground. So it was reviewed by the Dutch and by this US CBO, which are both more have more experience than us and have much bigger offices, so more staff at their in their offices. So we had that methodology reviewed. So we think that the having measured the impact of the retail carbon tax, reversing it would probably lead to similar positive economic impacts and fiscal impacts as well.
Thank you. And that external review process is very important in our work at the CDA Institute. And it's amazing to hear you say that, not surprising, but still amazing. And very happy to hear that on occasion, you have these exchanges and
Oh
your
yeah.
own work is reviewed. Yeah. That's amazing. Well, we are getting close to time, Monsieur Giroux. I don't know if you want to make one final statement about your work and its importance. I'll give you the floor for a minute if you do.
Sure. I believe that having a PBO is an important element of a well-functioning democracy, not a fundamental one like a Supreme Court or a parliament, but certainly one that equips parliamentarians with an additional tool to ask the right questions, to propose amendments to legislation or new pieces of legislation and new policies to governments so that they can better serve the electorate and the citizens. I would also say that um, the OECD assesses regularly PBOs and independent fiscal institutions around the world. And in a yet unpublished assessment of PBOs in the world, they ranked Canada's PBO as number one for its efficiency and its capacity to help parliamentarians. I've been begging them for months to release it as soon as possible, but they're telling me it's still months away from being published. So in the meantime, I can only talk about it without having the document to wait. But I was pretty proud of the team here when they said we ranked number one ahead of institutions that have been established decades and decades earlier than that have much bigger budgets than us. So quite an achievement for the office, I thought. So
Okay,
I'm taking this opportunity to brag a bit.
fantastic! Congratulations, and we look forward to the press release,
Me too.
the normal press release. And thank you very much for your time in joining us today and in the clear presentation and answering all the questions so clearly and fully. Really appreciate that. Thank you to everyone and to our members who attended. I want to make a little bit of publicity for our event on Monday, which is already well attended, but there's no capacity limit. So please do join us on Monday for the next webinar, Monday, May 26th, in a few days at 10 a.m., because our speaker is joining us from Europe. And she is Her Excellency Dr. Ailish Campbell, Ambassador of Canada to the European Union. Navigating Global Change, Canada and the EU in a Shifting World Order will be her topic. Please join us for this webinar. Thank you, everyone, for attending today. We appreciate your support and participation. Thank you.